at the last class, we have treated method of depreciation, and we have treated the calculation on 3 methods of depreciation, which is sum of the year, digit method, straight line method, and reducing balance method. So let's go to accounting for depreciation. How do we record our depreciation now? Accounting for depreciation. Now we have 2 methods of accounting for depreciation. We have method 1 and we have method 2. So method 1, how do you account for your depreciation? That means when you want to account for your depreciation, when you want to record your depreciation in your record, in your book of record, this is how you record it under method 1. It means you will debit depreciation account, and credit assets account. That means the assets you want to depreciate now. You credit the account. So let's imagine now that the cost under method 1, let's say the cost of an asset is 40,000 naira. Let's say the depreciation, the annual depreciation is 10,000 naira. That means the annual depreciation, let's just imagine that the annual depreciation is 10,000 naira. That means the value will be depreciating by 10,000 naira every year. 10,000 naira. So how do you account for this depreciation using method 1? Now that means you have asset account. The value of the asset is the cost of the asset is 40,000. So let's say you have asset account. That asset can be land and maybe maybe building, because you don't depreciate land. Maybe building, property, equipment, machinery, plants. So let's say you have the asset account and you have the depreciation account under method 1. So how do you now record the 10,000 now? How do you record the 10,000? Using method 1 and method 2. Now this is how you record it. Now normally when you purchase an asset, you normally debit the asset account, because when you purchase an asset, that means you credit cash and you debit that purchase account. So they didn't ask us to anything does not affect cash here. We are not treating cash. That means this 40,000 naira will be the balance, let's say it was for sale on 1st January 2023. So that means cash, because it's cash that I used to purchase it. It will be cash. How much is it? 40,000 naira. Now, because the asset has depreciated now, they said when you have depreciation now, they said you should debit depreciation account and credit asset account. So debit depreciation account with, that means let's say 31st December, that's the account we are. That means the asset account, what's the depreciation? 10,000 naira. Asset account, you debit depreciation account with asset, how much? 10,000. Now you now credit the asset account with the depreciation amount, which is 31st December 2023. Depreciation account. How much is it? Now, can you follow method 1? Method 1 says that debit depreciation account and credit asset account. Team more double entry in that nìyẹn. So now come on, the carrying amount of the asset now. That means you have balance carried down here, right?
Yes.
balance carried down will be what? There is 10 year, there is 40 year. It will be what? Hello? Balance carried down. It will be what? Kí ni balance carried down máa jẹ́ ń bì?
30,000.
30,000. So this one will be 40. And this one will be 40, right?
Yeah.
That means automatically the balance brought forward or brought down will be here to be 30,000. That means that's the value of the asset now. The asset has depreciated. That's the essence of you crediting the asset account. Double entry. They say when an asset is reducing, when you want to reduce the value of an asset, what do? You credit the asset account. Shey get where? That's the reason why we are crediting our asset account, to reduce it by the 10,000. So the carrying amount will now be, or the balance carried down will now be 30,000 naira. So this depreciation now will be taken to your statement of profit or loss account. That means it will be your annual depreciation in your statement of profit or loss account. So now take this one to profit or loss. Èló lẹ máa take? Èló ló máa be? That's 10,000. So machine, that's method 1. Now the disadvantage of method 1 now is that by the end depreciate, you are depreciating this value now 10,000 every year. That means if you are in year 2, for you to know the cost of that item, you need to go to year 1, right? This is the first year. We have depreciated in the first year. The value is 30,000 naira. That means for you to know the value of this asset now, that means for you to know the cost of the asset, how much the asset was purchased, you need to go back to where the asset was first purchased. Shey get common so why? Hello? Okay. Now, Emo, what happened that with this method now, that means the cost or the value of the asset will be reducing. For you to know the initial cost of the item now, you will need to go to the period where the asset was purchased for you to know the exact value of the asset. I get why? That's the disadvantage of this method. Shey get it common so. Okay. So let's go to method 2. Method 2 says that you will not credit asset account at all. So let's go to method 2. Look method 2 now. Look at method 2. Method 2 say that you will debit depreciation account and you credit provision for depreciation account. So in this method now, that means the value of assets will be retained throughout the lifespan of the asset. Am I communicating now? Look at this now. Let's say the cost of an asset is 40,000 naira. Why the annual depreciation is 10,000 naira, just like the way we calculated the other time. That means you have asset account. You will debit it, let's say 1st January 2023, cash, because it was purchased with cash, 40,000. Now, look at it now. You will have your depreciation account. You have your provision for depreciation. account. That means you are making provision for depreciation. Now look at it now. They said debit depreciation account. Debit it. So it will be January 31st December 2023. We have provision. I will shorten it. Provision for depreciation account. How much is it? How much is it? 10,000. Now look at it now. We have, he said you should credit provision for depreciation 31st December 2023. You have depreciation taken to depreciation account. How much is it? 10,000. That means you can see that the cost of the asset is retained. That means at any point in time, you can determine the cost of the asset. That means as the asset is depreciating, it will only be affecting depreciation account and provision for depreciation account. And this is the most common method between the method 1 and method 2. That means method 2 is the most commonly used method. Now go to page 81, you see it now. They say it is the most commonly used method as it allows disclosure of the cost of the PPE, while the annual depreciation is accumulated in another account refers to provision for depreciation. Brief recast on method 2 now. Method 2 says that you should what? Debit depreciation account and credit provision for depreciation account. Now that means the value, method 2 is the most commonly used method. That means between method 1 and method 2, people prefer to use method 2 because it will enable you to retain the cost of the asset throughout the lifespan of the asset. That means at any point in time, you can determine the cost of that asset. Am I communicating now? You can determine the cost of the asset. Look at it now. You can see that using method 2, it does not in any way affect asset account. That means as you are incurring depreciation, that means depreciation account now, you will take it to statement of profit or loss account in year 2023 now. You take this 10,000 naira after you have recorded it. Now that means if you make any depreciation in the current year, you will be accumulating it in provision for depreciation year. That means your provision for depreciation will be increasing. That means in year 2024 now, that means provision for depreciation will be 20,000 naira. It will be increasing. It will be increasing until the asset is fully depreciated. You can see the cost of the asset you will see that in method 1, as the company is incurring depreciation in method 1, what happen? The value of that asset is reducing every year. But in this aspect, the value of the asset does not in any way reduce. And I've told us that method 2 is the most commonly used method. Method 2 is the most commonly used method. So let's go to disposal of non-current asset. Disposal of non-current asset. Non-current asset. Now, when an asset is disposed, am I communicating now? When an asset is disposed, let me think about per asset. If you sold an asset, that means you have a car now. You now dispose the asset. It is mandatory for you to recognize whether there is gain or loss on disposal. When an asset is being disposed, it is required for you to calculate gain or loss on disposal. You have a car or you have a building, you now sell the building now. You need to calculate gain or loss on disposal. So this is the format now for you to calculate gain or loss on disposal. Do you make a gain or loss on the disposal of assets? So this is the format. So it means it is net sales proceed. Net sales proceed. Sorry, net sales proceed minus carrying amount of that asset. Carrying amount of that asset. Now look at it now. If this net sales proceed is greater than the carrying amount of the assets, you have gain. It will be gain. But if the carrying amount is greater than the net sales proceed, that means the net proceed is lesser than the carrying amount, you will have loss. You have what? Loss. So let's God. So let's continue now. So if you want to determine the gain or loss now, let's say you are given a question now that the cost of a plant which is an asset, let's say the cost is 300,000. Let's say the accumulated depreciation is let's say is 150. Now they said let's say the plant is now disposed. That means the sales proceed, when you contact planting, sales proceed of the plant, the sales proceed is 500,000. Now the selling expenses, that means the amount they have to spend for them to sell it, that's what we call selling expenses. That means the selling expenses for this plant now, that means before they can sell it, they need to incur an expenses, maybe agency fee, maybe the cost of transporting it to where they will sell it. Let's say it is 100,000. Now they now say we should calculate the gain or loss on disposal using this format now. Using this format which says for you to calculate the gain or loss on disposal, it is net sales proceed less carrying amount of the asset. Now that means we need to calculate the net sales proceed. What do you mean by net sales proceed? It means the amount at which the asset is sold minus the expenses that is incurred to sell the item. That is what we mean by net sales proceed. Net sales proceed. So how much is the net sales proceed? Net sales proceed will be sales proceed. It will be the sales proceed minus the selling expenses. So how much is the sales proceed? Is 500,000 minus 100,000. That will give us 400,000. So the carrying amount less the carrying amount. What is carrying amount? Carrying amount is cost minus accumulated depreciation. So they have given us the cost to be 300,000 naira, while the accumulated depreciation is 150. So you remove it. So you have accumulated cost is 300,000, while the accumulated depreciation is 150. So that will give you the carrying amount is 150. So less it. So from this question now, we can see that the net sales proceed is greater than the carrying amount. So how much is the difference between the two? It is 350. So this is gain on disposal. That means they make a gain when the plant was disposed now. But if assuming that the carrying amount is 450,000 naira, while the net sales proceed is 400,000 naira, that means that the carrying amount of the asset is greater than the net proceed. That means the value of the asset is greater than the amount in which that asset is sold by 50,000 naira. That means that will be gain, that will be loss on disposal. But based on this question, we have gain on disposal. We have gain on disposal. So we have come to the end of chapter 2. So we'll be going to chapter 3 in our next class. Thank you.